So the market finally had a little bit of a pullback today, SPY closing just below the 597 level, down 0.31%. And this is basically coming off of this 600 strike, which we tagged just a couple of days ago and have since been rolling over, now trading right around the zero gamma exposure level. The 600 strike is still the largest gamma exposure concentration. And as far as the SPY goes, you can see we've got gamma exposure going all the way up to the 615 level. This is pretty large positive gamma exposure concentration readings. And as we mentioned in the last couple of YouTube videos, we believe this is positioning for another leg into all-time highs into year end. If you recall, we've been saying what we want to see is volume coming in at these higher strikes. Today, we basically didn't see any volume coming in above 600. So because the volume was so low, dealer selling pressure kicking in here from our upper dealer cluster zone. These are dealers selling shares of the underlying security in order to hedge their option positions.
Thanks, Anthony. I've been watching this line on the VIX, which actually on my screen you can see it only goes back to basically the beginning of 2024. But if you were to draw it further, it would actually go back all the way to the early spring of 2023. So there's something about this 14.5 to 15 area that has been very important. And we're right up against this lower support level where it was resistance and then became support after July. Now, I don't know if this is strictly due to the election and maybe we're about to break back under this again and see a new regime of lower volatility. But with this being support for months and months, I would be hesitant as a market bull to want to count on something different. So I've got my eye on a possible volatility reversal here.
Let's take a quick look at the Qs. Not as big of a drop today, down only 0.18%. You can see how close the dealer cluster zones are. Basically, everything is concentrated between 510 and 520 in terms of gamma exposure data. And so if we do see additional selling pressure, the Qs could come down to 510 or 505 even. But as long as this gamma exposure, and this is all positive GEX here, as long as that remains, I think this is a buy the dip opportunity. So we could see a volatility spike like Sean was mentioning, which could bring prices down anywhere from 2 to 3% across the major indices. But it looks to me like market participants are positioned to buy the dip in that event. Positioning is really suggesting that price could go as high as 520. And so that would kind of be my year-end look as far as the Qs goes.
Yeah, I tend to agree with you, Anthony. I think if we do get a VIX spike, it's probably a pullback in the context of this market continuing to march up the wall of worry, probably into year-end. Looking at IWM, it's been very bullish as well. I mean, ever since November of last year, man, it's just been on a tear. And right now, with this huge move that happened after the election, we see price has reached some resistance up here at the weekly Keltner channel. It blew over the top of the daily Keltner channel, and so we're at the top of the weekly channel now. And today's decline basically took price down to this sharply rising whole moving average. Now, if it gets below that, it may put a damper in WM's price movement short term. But basically, as long as it's above the whole, I'm going to be looking for this to move higher. And I wanted to point out a couple of things on the GEX, our 3D GEX surface. Expiring this Friday, we have this large, relatively speaking, a large gamma cluster at 245. That's a little bit higher than where we are. There is some negative gamma too, but if you went through and looked at all these different GEX clusters that are here, you'll see that 245 is the largest for this week.
Yeah, I definitely got my eyes glued to IWM. Next, we just want to take a look at Netflix. Netflix coming up, still moving higher, even on some softness in the market today, up to 820. We've been watching this since it was down in the 760 range in our lower dealer cluster zone. Gamma exposure is still continuing to look higher, volume coming in here between 800 and all the way up to the 850 level. We see pretty decent sized volume for Netflix. So I'm watching the 820 strike, the gamma exposure at the 820 strike, and this gamma exposure at the 850 strike. Those both seem to be growing pretty quickly here. The largest gamma exposure currently is at the 810 level, and so we are above that, obviously trading at 819. And we actually played the move from the 760 level all the way up through the 800 level. We exited our position yesterday, locking in $1,550 in profits. Now, this is on a $10,000 portfolio, so this actually equates to 15% gain on our portfolio. So Netflix was a big winner for us. You can see this move that we highlighted here all the way up into the largest gamma exposure concentration level at 800. This is taken yesterday, and so obviously Netflix continuing to move up here has our interest. Coming back here to the current chart, I'm going to be looking for some sort of consolidation or pullback back into at least this 800 level, maybe all the way down to the 0 GEX level, which is around 790. A pullback into that level would look like a better entry point from a risk reward perspective. Most likely all this positive GEX will still be there, especially if the pullback is relatively quick. And that might be an interesting point to enter in for a move into the December OPEX, which is on December 20th. So, maybe an entry point around this level for a move back up into the 820 strike. Maybe even to 850 if if animal spirits continue, especially if we see volume continuing to come in at these higher strikes. So that's going to be one that we're watching. We've played Netflix a number of times in our community Discord and hoping to play it at least one more time into year end. By the way, if you're interested in checking out our community Discord, there's a link in the description below.
All right, Anthony, my last one today is going to be Apple. And you can see on the chart here, it looks to be forming sort of a messy flag, I'll call it, but after a sharp move from May into the summer, what I like is that even though price has been weak these last couple of days, we're still holding above the whole moving average, which is at 222.64. So I'm automatically leaning toward the upside when I see price above the whole moving average. Let's briefly look at the gamma picture. We have positive gamma. It's actually been trending positive since this November 1 gamma low point. We also have a large gamma cluster this Friday, which is OPEX at 230. And you can see based on our gamma levels chart, we still have that big gamma cluster here that we just looked at on the 3D chart as well. So I'd like to see if Apple might be able to pop up into this red box as we approach Friday.
Thanks, Sean. Next, I want to talk about SMH. SMH really not going anywhere for the past month, been stuck between this 240 and 260 zone, just bouncing up and down all around. And you can see the 0 gamma level, which is right around where we are right now, has been pretty consistent right through the middle of that zone. And that's often the case in these range-bound markets. Price is just oscillating around that 0 gamma exposure level. When I look at the gamma exposure structure, I see a pretty even distribution from right around where the price is now. Price trading at 251.86 as of the close today. And as far as the structure is concerned, I don't really see any skew. Everything looks pretty balanced, and this to me basically just says that there's really no bias either to the upside or to the downside as far as market participant positioning in the options market is concerned. The largest gamma exposure strike is on the lower side here at 245, and this is just I think a testament to the market environment right now. Semiconductors really haven't gone anywhere for the last several weeks. These were the leaders in the market earlier this year and last year. And I think this goes to the sector rotation that we are seeing and that we've really seen ramp up in the last several trading sessions since the election. We've seen a huge move over into small caps and mid caps. I mentioned this in our YouTube video yesterday. And so, of course, a lot of money is coming out of the bigger mega cap stocks, led by semiconductors especially, and into some of these small and mid-cap type of plays. And I think that's being evidenced here in the gamma exposure distribution on SMA. Be sure to check out our gamma exposure dashboard and option flow analytics tools. You can head on over to geeksoffinance.com. We've got several different membership tiers. Also, we have a community Discord, which is absolutely free to check out. I'll put a link in the description below for that as well. Thanks so much, everybody, for watching, and we'll see you guys in the next video.